Hash, how Gen Z is quietly changing money forever. Gen Z isn't just spending money differently. They're quietly rewriting the rules of money itself. They're learning to invest from TikTok, refusing to stay loyal to bad jobs, questioning whether buying a house is still worth it, and building income streams that didn't even exist 20 years ago. And whether you agree with them or not, their financial choices could permanently change how the entire world earns, spends, saves, and invests. To understand why, we first need to look at the financial world Gen Z inherited. For generations, the path was simple. Get an education, find a stable job, work hard, buy a house, save for retirement, and eventually enjoy the life you built. The path wasn't always easy, but at least it was clear. Gen Z grew up watching that path become less reliable. They saw adults lose jobs during financial crises. They watched housing prices rise much faster than salaries. They saw university degrees become more expensive without guaranteeing secure employment. And they watched loyal employees get replaced after years of service. Then, just as many of them were entering adulthood, a global pandemic disrupted education, employment, housing, and almost every normal expectation about the future. So Gen Z didn't simply reject the old financial system. Many of them looked at it and decided that the old system had already stopped working. The first major change is happening at work. Older generations often viewed a stable job as the foundation of financial security. They've seen companies restructure, automate roles, freeze salaries, and dismiss employees with very little warning. So instead of asking, how can I build my entire life around this job? They're asking, how can I make sure this job never controls my entire life? That shift is changing the relationship between workers and employers. Gen Z is more willing to leave when the pay, flexibility, or working conditions no longer make sense. They are less impressed by job titles and more interested in what the job actually provides. Can they work remotely? Can they control their schedule? Can they maintain a life outside the office? Are they learning useful skills? And most importantly, are they being paid fairly? Previous generations were often told that discussing salaries was inappropriate. Gen Z is much more open. They share salary information online, compare job offers, discuss workplace conditions, and openly explain why they left an employer. Companies may see this as disloyal. Gen Z sees it as transparency, and transparency matters because companies have an advantage when employees don't know what everyone else is being paid. Gen Z is also changing the idea of income itself. In the past, your income was usually connected to one profession. You were a teacher, an accountant, a mechanic, or a salesperson. Your salary was your income. Today, someone might work in marketing during the day, edit videos at night, sell a digital product on weekends, and invest a small amount every month. None of those income streams may be large on their own, but together, they create something Gen Z values deeply: options. This is why the idea of multiple income streams has become so popular. It isn't always about becoming rich. For many young people, it's about avoiding complete dependence on one company, one manager, or one paycheck. A second source of income can make it easier to leave a bad job. It can cover an emergency. It can become the beginning of a business. Or it can simply create a little more freedom. But there is a downside. The internet has created a culture where every hobby feels like it should become a business. Photography becomes content. Gaming becomes streaming. Travel becomes a vlog. A personal story becomes a product. Gen Z has more ways to earn money than any previous generation, but they also live with the constant pressure that they should always be doing more. Every day they see young people claiming to make thousands through e-commerce, cryptocurrency, property, artificial intelligence, content creation, or some secret online business. Some of those stories are real, some are exaggerated, and Sometimes the real business is selling the dream itself. This leads to another major change. Gen Z is learning about finance from completely different sources. For decades, financial education came from parents, schools, banks, advisors, and newspapers. Today, a 20-year-old might learn about index funds from a 60-second video while waiting for a bus. They might learn about credit scores from YouTube. They might discover budgeting through Instagram. They might join an investment community before ever speaking to a financial advisor. This has made financial knowledge more accessible. Topics like compound interest, debt, retirement accounts, inflation, and exchange-traded funds are now being explained through simple videos, animations, memes, and personal stories. Finance no longer belongs only to professionals wearing suits. That is a major change. Financial institutions benefit when money feels complicated. Confused customers are less likely to question fees, compare products, or challenge bad terms. But Gen Z expects information to be fast and clear. When they see a fee, they want to know what it is for. When a bank offers a poor interest rate, they compare alternatives online. When someone makes a financial claim, they check the comments. This pressure is forcing banks and investment companies to change. Apps are becoming simpler. Minimum deposits are getting smaller. Investments are becoming easier to access. Banking is becoming faster, more visual, and more mobile. To Gen Z, mobile banking is not an extra service. Mobile banking is banking. But convenience comes with risk. A previous generation might have needed to call a broker, complete paperwork, and wait before buying an investment. That delay created friction, and friction gave people time to think. Today, someone can see a stock mentioned online, download an app, transfer money, and invest within minutes. That makes responsible investing easier. But it also makes gambling on something you barely understand much easier. This is why Gen Z's relationship with investing is so complicated. On one side, many are learning to invest earlier. They understand that simply saving cash may not be enough to protect them from inflation. They are interested in index funds, retirement accounts, property, businesses, and digital assets. Fractional investing allows them to begin with only a few dollars. Investing no longer feels like a private club for wealthy people. But their financial education is happening inside an attention economy. And attention rewards excitement. A diversified portfolio held for 30 years is usually sensible. It is also boring. A video claiming that one unknown stock could make you rich next year is much more exciting. So young investors are constantly pulled between long-term discipline and the fear of missing out. For the first time, serious educators, professional investors, anonymous strangers, entertainers, and scammers all appear on the same screen. Knowing who to trust may become one of Gen Z's most important financial skills. There is also a contradiction at the center of Gen Z's financial life. Many want to save and invest early, but they are also dealing with high rent, expensive education, food costs, insurance, transportation, and home prices that feel impossible. Social media tells them to invest aggressively. Real life often leaves very little money at the end of the month. This can create financial hopelessness. Imagine being told to stop buying coffee so you can afford a house, while home prices in your city increase by tens of thousands in a year. At some point, the advice starts to feel disconnected from reality. When the biggest financial goals feel unreachable, people may spend more on smaller experiences they can afford now. Travel, concerts, restaurants, technology, time with friends. Critics may call this irresponsible. Gen Z may see it differently. Why sacrifice every enjoyable experience today for a future that no longer feels guaranteed? This does not mean they don't care about the future. It means they may value the present more because they trust long-term promises less. They are also redefining success. For older generations, success often meant a large house, a good car, a respected job title, and a comfortable retirement. For many younger people, success means control over time, the ability to work remotely, the ability to take a break, the ability to avoid a long commute, the ability to leave a toxic job, the ability to choose meaningful work. This is why financial freedom often appeals to Gen Z more than traditional retirement. Retirement says, work for most of your life, then eventually stop. Financial freedom says, build enough flexibility that work becomes a choice. The goal is not always to stop working. The goal is to stop feeling trapped. Gen Z is also changing the way people spend. They have grown up with subscriptions, contactless payments, one-click purchases, stored cards, and buy now, pay later services. These systems make spending almost invisible. A $5 subscription doesn't feel expensive, but 20 small subscriptions can quietly destroy a monthly budget. A $200 product feels easier when it is divided into 4 payments of $50. But the total cost has not changed. The easier spending becomes, the more valuable the ability to pause becomes. Do I really need this? Would I still buy it if I had to pay the full amount today? Am I buying the product or the feeling attached to it? Those questions may become essential in an economy designed to remove every obstacle between desire and payment. Gen Z's relationship with brands is changing money too. They are less likely to trust polished advertisements automatically. They read reviews. They watch product tests. They search for cheaper alternatives. They expect companies to respond publicly when something goes wrong. One customer with a phone can now damage a company's reputation. But Gen Z can also be heavily influenced by online creators. The difference is perceived authenticity. A traditional advertisement says, "Trust this company." A creator says, "Trust me, you've watched my life for 2 years." That relationship can feel personal, even when it is not. And when a creator recommends a financial app, credit card, course, or investment platform, viewers need to ask an important question. Is this the best product, or is it simply paying the highest commission? Gen Z's financial future will partly depend on recognizing when trust is being monetized. The truth is, Gen Z is not automatically better with money, and they are not automatically worse. They are adapting to a completely different financial world. They have more information, but also more misinformation. More investment opportunities, but also more speculation. More ways to earn, but less stability. More technology, but more temptation. More freedom to design their lives, but fewer guarantees that traditional milestones will remain affordable. They are changing money because the old rules were designed for a world of lifelong careers, affordable homes, physical banks, predictable retirement, and limited financial information. That world is disappearing. Gen Z is entering a future of remote work, artificial intelligence, digital income, global competition, rising costs, and constant economic uncertainty. Their response is flexibility. They want income from more than one place. They want financial information explained clearly. They want companies to be transparent. They want to invest earlier. They want the freedom to change direction. And they are less willing to delay every enjoyable part of life until retirement. Some of these changes will create stronger financial habits. Others may create serious problems. The generation that normalizes early investing could also normalize speculation. The generation that rejects traditional careers could build independence, but it could also face unstable income and burnout. The generation that values experiences may build meaningful lives, but it may struggle to create long-term wealth. The outcome is not decided yet, but the influence is already visible. Banks are becoming apps. Investing is becoming social. Careers are becoming flexible. Income is coming from multiple places. Financial education is becoming entertainment, and money is becoming less private. The question is no longer whether Gen Z will change finance. They already are. The real question is whether the financial system can change fast enough to keep up. Because every generation inherits a set of rules. Some follow them, some improve them, and some look at the entire game and ask one powerful question: why are we still doing it this way?